If spot XRP trade records are kept, this week could be one of the biggest ever, but not for the reasons most people think. What's coming isn't just another market move or another ETF launch. This could be the moment when everyone finally understands that XRP is at the center of a whole new era in finance. How about the craziest part? The most important people on Wall Street aren't waiting for proof. Before people even know what's going on, they're already making their move. When firms like Grayscale and Franklin Templeton, which are known for taking risks, line up at the same time to enter the spot market, everyone who owns XRP should take a deep breath and understand how big what is happening is. 24 million Grayscale, 15 million to Franklin Templeton. That could mean that 50 million XRP are taken out of circulation in just one day. I agree that those are just predictions and not promises, but the fact that this kind of demand is building up at the same time should be enough to tell you that this isn't just store speculation. These are regulated ETFs that are backed by regulated companies that follow the strictest rules in the world. They don't guess, they make plans, they get ready, they build up. A lot of people were not sure what the numbers meant. On November 18th, Franklin Templeton launched on CBOE, and many people thought that was the full start. No, that was just the CBOE entry. This week, the New York Stock Exchange will let both Franklin Templeton's Easy XRP and Grayscale's GXRP spot trade. That's when the real wave starts. XRP ETFs. This is important because CBOE's market is not very big. Billions. The NYSE is worth about $30 trillion. It's not a mistake. 30 quadrillion. And as soon as those ETFs are listed on the NYSE, there are a lot more companies, brokers, advisors, and funds that can use XRP without any problems. Also, think about the time. Everything is taking place right before Thanksgiving week. These ETFs don't trade all the time like crypto does. They work the same hours as the stock market. You have a start day, a short week, the holiday break, and Black Friday, all happening at the same time during one of the busiest times of the year for financial news. For XRP, that means more eyes, more attention, more news, and more story momentum than we've seen in a long time. Now, though, things get really interesting. Demand for ETFs isn't just going to appear out of thin air. It's based on trends we've seen before, like when Canary Capital launched earlier this month and moved almost 59 million in volume on the first day. That was worth about 25 million XRP all by itself. A lot less space was used for that. Add that up and then multiply it by the Grayscale and Franklin Templeton scales. This is not usual. We call this institutional positioning. This is what a liquidity squeeze looks like in its early stages. Yeah, XRP is somewhere between $2.20 right now, but people still act like that price is high, which I find funny. In the meantime, big institutions are getting ready to buy tens of millions of XRP all at once in public without any doubt or fear. This week I bought more. It cost me less than $2. I'll keep adding. I make a new goal every time I reach an old one. When you know what's coming, that's how it works. But I did not want to make judgments. I wanted facts. Franklin Templeton's past work with crypto goods was one of the first things I looked into. This is the first crypto ETF they've ever put out. It was a Bitcoin spot ETF in January 2024. A lot of time wasn't spent on altcoins. They didn't do too many things at once. They didn't try anything new. The fact that they only chose XRP as their next move shows how well this move was planned. A lot of money was bought and sold in their Bitcoin ETF on the first day. And XRP could do the same thing, or even better, because the time, momentum, and multi-ETF launch environment are all just right. It's not just neat on the spot. The futures market has been going through the roof. The number of XRP futures trades on BitMEX went up by 2,668%. Yes, more than 2,000%. And in just 24 hours, it went up by 600%. Moves like that only happen when big people are getting ready for something. And when BitMEX, Kraken, Binance, OKEX, and Bybit all show rises in open interest, funding rates, and leveraged long positions, this is the kind of situation where big events happen and the market understands what was going on behind the scenes. Money isn't bet on nothing by traders. There is always someone who knows something. We now have a great reason for why the futures markets are getting so hot. The ETF launches are happening on Monday. No, the real story isn't just about ETF flows. We're just beginning to scratch the surface. It's about who is making those flows happen. Franklin Templeton is in charge of $1.5 trillion in assets. A trillion is written with a T. Behind them is a group of institutional companies that most people don't know about. I was curious about who their biggest customers were, And when I started looking into it, well, let's just say it changed how big this moment could be for me. Some of the world's largest private equity firms, sovereign wealth funds, pension funds, foundations, and endowments are clients of this company. The names of these companies are NBIM in Norway, GIC in Singapore, Abu Dhabi Investment Authority, Ontario Teachers Pension, General Atlantic, Copenhagen Infrastructure Partners, and dozens of other huge insurance companies and global institutions. These aren't crypto bros. This group is not a gambler. These are well-run, multi-billion-dollar companies with very long-term goals and very strict due diligence rules. People who are interested in a new asset class don't buy $50 worth of it. They make rocks move. The best part is now here. The XRP ETF will be pushed by Franklin Templeton's managers to their clients. That means that a lot of financial experts will show people who have never used cryptocurrency before XRP. Just the welcome effect could be huge. All of this is a part of the world's bigger change, getting hundreds of millions of people to use digital assets all at once over the next 10 years. It's not just Bitcoin. It's not just Ethereum, XRP, and all other utility tokens that made it through the legal phase. We're still in the beginning. All of this is a part of the world's bigger change, getting hundreds of millions of people to use digital assets all at once over the next 10 years. It's not just Bitcoin, it's not just Ethereum, XRP, and all other utility tokens that made it through the legal phase. We're still in the beginning. Because most people don't know that retail fear of missing out, FOMO, won't drive the next big price cycle in crypto like it did in the past. It will be led by the building of things. Access will be what makes it happen. It will be led by institutions adding crypto exposure to their portfolios automatically, in the same way that they decide how much to put into stocks, bonds, commodities, or valuable metals. The money will keep coming in as soon as crypto is seen as just another type of currency. Right now, only a small portion of buyers around the world have real-world exposure to digital assets. A lot of experts have not suggested it. A lot of organizations have stayed out of it. A lot of regulatory systems aren't fully put into place yet. Though all of that is going on, Bitcoin ETF flows are already in the billions. There are already early signs that altcoin ETF designs are taking shape. We can already see the big players like Franklin Templeton, Grayscale, Bitwise, and 21 Shares getting ready to be where they need to be before the waters open. Take a look at this. About 50 to 60 million people around the world are thought to currently own Bitcoin. It might seem like a lot, but think about how many people have a bank account, a credit card, or use mobile banking apps. Check it out against the amount of people who put money into mutual funds, stocks, bonds, or retirement accounts. Bitcoin and the whole crypto market are still very small compared to the size of the world's economy. Adding 200 million, 300 million, or even 500 million new users over the next 10 years will cause a demand shock that has never been seen before across all energy assets. And XRP is already in the group of cryptocurrencies that will gain the most from being used in real life. Settlements, payments, cash flow, banking infrastructure, and cross-border financial lines. These aren't groups that are driven by hype. Each and every government, bank, business, and person deals with these trillion-dollar systems every day. This is why it's important that big banks, Apple, Google, and Samsung are working behind the scenes to add digital wallets. When you open your phone one day, there will be an update that just says new feature, digital assets wallet. You can send and receive crypto right away. At that point, more people will adopt in 1 year than in the 10 years before that. All of a sudden, your aunt, who has never used cryptocurrency, will have an XRP wallet. The people you work with will have one. Blockchain payment will be looked into by every business you go to. There will be tokenized deposits, money market funds, treasuries, and everything else that banks give. This is where people don't think XRP will be in the long run. Unlike many other assets in the area, XRP wasn't made to be a trend, a speculation, or a short-term bubble. It was made to fix a real problem that cost a lot of money. Global fragmentation of cash. Banks don't want to keep a lot of different coins on hand. Firms don't want to lose 5% every time they send money to another country because of fees, and companies that send money don't want to have to wait days for settlement. These problems can be solved in seconds with XRP, and behind the scenes, a huge number of institutions are now working on blockchain-based payment systems. There are steps being taken right now, but most people don't see them yet. The new ETFs are yet another sign that the rest of the financial world is finally agreeing with what early XRP users have known for years. Even though the ETF story is very big, the action on the futures market may be even more telling. When open interest on BitMEX goes through the roof by 2,068%, derivatives volume on Binance goes through the roof by $6 billion, or funding rates flip highly positive across OKEX by BitKraken, these are signs that professional traders are getting ready for something. Traders won't move their leverage unless they are sure of a trigger. Another big event that changes things is when a $1.5 trillion asset manager comes into a market that has never seen this much controlled institutional demand before. The advice effect is another thing. This is not something that stores ever think about. Franklin Templeton isn't going after individual crypto owners when they start a fund. They are going after their network of advisors. There are thousands of consultants, and each one has hundreds of clients. As soon as those advisors start suggesting XRP ETFs, you start a loop of constant money coming in. New buyers are shown the ropes. It's because they ask. They tell their friends. Advisors see that interest is growing and give out more. This is because ETFs buy the base asset automatically, so each wave adds to the demand. This doesn't include Franklin Templeton's national wealth funds, pension funds, insurance giants, endowments, or private equity clients. These groups do not buy $300 worth of XRP. They don't spend $5,000. They work with amounts that are measured in millions, a few in the tens of millions, some by the billions. And these funds are like seeds when it comes to new types of assets. They begin small, they check the ground, and if the crop does well, they don't think twice about expanding. That's what most small buyers miss. They see an ETF start and think, that's cool, maybe some money will come in by need, but organizations think about generations. Everything points to digital assets becoming a new area of global banking. If that happens, long-term investments will have to be made in assets that are actually useful, not just a guess, not a choice, unavoidable. This is also related to the bigger picture we're in. Faster payments, tokenized financial tools, programmable money, digitalized settlement, instant cross-border transfers, and effective liquidity systems are all things that the world is moving toward. All of the big banks are going through changes. Every central bank is trying frameworks for digital currencies. Every global company is looking for ways to cut down on the costs and delays of transactions. XRP is one of the few assets that was made to work in that world. Not for times of hype, not for seasons of meme coin, not for crazy speculation, for a real business purpose, useful stuff. Settlement for real. You can see why Monday might be more than just another day on the calendar when you look at things like institutional access, ETF inflows, futures market action, advisor networks, corporate adoption behind the scenes, and a major shift toward digital finance around the world. That moment might be one that people remember and say, that's when everything began. Because every ETF launch has a meaning behind it. XRP is getting to the point where traditional banking can't ignore it any longer. They have to accept it now, whether they love it, hate it, or don't understand it. Once they understand it, they study it. After they study it, they give money to it. As soon as they set aside time for it, they send it to clients. And once they tell customers about it, the rate of usage speeds up, even if stores aren't ready for it yet. There are early signs of something much bigger going on than a price change, something a lot bigger than the news. Not just a launch day. One institutional choice at a time, we are seeing the start of XRP becoming part of the way global markets work. This is not advice about money. And as this change speeds up, another thing becomes clear. These people didn't just get lucky. They were smart, patient, focused, and showed up early. They are ready. They knew that crypto wasn't about quick moves long before Wall Street did. It was about how money, value, and the banking system have changed over the years. While most people were busy with other things, early investors were looking into how liquidity changes, how institutions act, how rules change, and how adoption rates work. Because, well, the biggest moves of wealth in history don't happen when everything is clear. They happen during changes when the old system is still in place and the new system is being built underneath it invisibly. Most people still think the future will be the same as the past, and what insiders see months before everyone else does is downplayed in the news. What we're going through right now is just that. Everything lines up when you zoom out. The push from regulators, the entry of institutions, the launches of ETFs and futures contracts, the hiring of advisors, the interest from sovereign funds, the adoption by corporations, the shift toward digitization at the macro level, and even the political landscape are all working to make the global financial rails faster and more efficient. All of these things show that a new financial standard is taking shape, slowly at first and then all at once. And it's also interesting that stores are still hesitant. Timelines are still being argued over in retail. Noise, drama, and short-term expectations are still taking people's attention away from retail. In the meantime, organizations are not guessing what will happen. They are putting people in place. They are not asking if digital assets will be a constant part of portfolios around the world. They're getting ready for when, not if. That difference in how people think is very important. Stores are waiting for approval. Institutions take a stand before the proof comes in. That's why today is important. It's not just about one day or event. It has to do with what that day means. When several big asset managers join the XRP market at the same time on the world's biggest stock exchange, it means more than one thing. XRP is moving from a niche for speculation to the structure of standard finance. That's not a lie. That's not a story. It's not hopium there. That's acceptance at the infrastructure level. Now let's talk about the next level, which most people still don't get. ETFs get people to buy things. They give you credibility. They bring about uniformity. They bring about normalcy. It's easier to add an asset to model portfolios, retirement products, wealth management systems, automated investment tools, and multi-asset allocation frameworks once it has ETF wrappers from more than one big issuer. To put it another way, XRP stops being a different kind of investment and starts being a standard choice in properly managed portfolios. The wave of demand that comes after isn't emotional when that happens. It's everywhere. It's about structure. It's already set up. It is built into the way banks, brokerages, RIAs, hedge funds, and national wealth pipelines do business. When something is added to the system, it simply works with it. This is where XRP's long-term promise really shines. That's because utility assets that hold up real-world financial lines don't act like normal speculative tokens. They don't go away. They don't fade. They do not depend on hype. They are what hold the new systems together. Every new user, wallet, payment method, corridor, institution, and allocation plan helps them. That's exactly what XRP was meant to be from the start. Now think about this situation, the one that most buyers still don't fully understand. In 3 years, you wake up and remember today. As of that point, banks will have full departments for digital assets. Real-time payment networks will be used by corporations to do business. Money markets that use tokens will be commonplace. All of the big brokerage apps will offer crypto exposure by default. There will be digital asset portfolios just for college scholarships, insurance companies, and pension funds. Digital monies will be issued or tested by governments. Blockchain payment will become a normal part of how banks around the world do business. And in that environment, the assets that solve problems, cut costs, and boost performance are the ones that large institutions will need. That's why getting there early is important. That's why it's important to study how institutions act. That's why it's important to understand macro trends. A store thinks in weeks. Bodies of power plan for decades ahead. Retail looks at the price right now. Institutions think about where money will need to flow in the future. A map is shown to retail. Institutions look at the facilities. And if you look back, XRP's whole path has been leading up to this point. From the original goal of fixing global liquidity problems, to the agreements between banks, to the fight over regulations, to the integration of global payments, to the current era of ETFs, a lot has happened in the past few years. Much of your stuff will never get this far. Most assets won't make it through legal clarity. Most investments will not be adopted by institutions. There aren't many real-world uses for most goods. But XRP does. And that's the difference between things that stay around and things that disappear. But it's easy to do the most important thing you can do now. Keep up with news. When things are like this, the people who do well are not the ones who freak out or follow the hype. They keep their feet on the ground, see the big picture, and act strategically when everyone else is busy. You already know what's going to happen. You don't need to follow reports. All you have to do is follow the clear path that global banking is taking. Because when widespread use happens, when ETFs are fully developed, when rules are clear, when tokenized finance is common, and when wallets are built into every phone and app, you'll want to be known as someone who was ahead of the curve and not someone who was behind the curve and wished they had known sooner. And this is the one thing that sets people who change their financial future apart from those who stay stuck. The will to learn right away instead of later. Being ready to invest in knowledge is important. The determination to move ahead before everyone else does. Speaking of which, if you want to know how the top 1% handle situations just like this, how they think, how they plan, and how they build wealth that changes their lives during times of financial change, read this.